Yesterday, the European currency held steady at the support level of 1.0525. The European Central Bank opted to pause in October after several consecutive hikes, leaving the deposit rate and the main rate unchanged at 4% and 4.5% respectively. In addition, data showed that the US economy expanded at an annualized rate of 4.9% in the third quarter. The reading followed the 2.1% growth recorded in the second quarter and surpassed the consensus estimate of 4.5%. Strong statistics raised expectations of one more rate hike this year, which in turn supported the US dollar. However, gloomy US fourth quarter GDP growth forecasts dampened demand for the greenback. Besides, ECB President Christine Lagarde said nothing new at a press conference after the meeting. She reiterated that the battle to tame consumer price gains is not over, and the regulator will keep following a data-dependent approach to determine further monetary policy conditions. The head of the ECB did not rule out further rate hikes amid rising geopolitical tensions and high energy prices. As for the British pound, the situation was the same. The price turned positive at 1.2070 and recouped some of its early losses. Today's macroeconomic calendar includes the core PCE price index, which is the Fed's preferred inflation gauge. The indicator is forecast to climb by 0.3% in September, up from August's 0.1% rate. On an annual basis, the core PCE price index is expected to ease from 3.9% to 3.7% in September, potentially weighing on the US dollar. Besides, traders may take notice of US personal income and spending data, as well as the University of Michigan's survey of inflation expectations. The indicators are likely to remain almost unchanged, so the euro has every chance of extending gains, thus reversing early losses. And now let's move on to technical analysis. According to the 1-hour chart, a false breakout at 1.0550, 1.0554 will create a buy signal, pushing the euro up to 1.0586 and even to 1.0616. At the level of 1.0616, I recommend going short on a rebound to catch an intraday correction of 20-25 pips. Short positions at 1.0586 can be considered only amid a false breakout in the hope of a move to 1.0554. Alternatively, if the price breaks through and fixes below 1.0550, 1.0554, the market will face a major sell-off, with the euro sliding to 1.0525. At this level, it will be possible to go long amid a false breakout. Going short on the rebound will be relevant at 1.0497. In this case, the downtrend will remain intact. Speaking of the British pound, bulls need to regain control of 1.2136. If the price breaks through and consolidates above this level, sterling will climb to 1.2172. At this level, it would be a wise decision to go short amid a false breakout. However, its bullish run may well be limited by the level of 1.2154. A false breakout at 1.2136 will create a strong sell signal, dragging the price down to 1.2100. Its unsuccessful breakout, in turn, will make it possible to go long, counting on the formation of a new lower boundary of the ascending channel. Long positions on a rebound can be opened at a fresh one-week low of 1.2070 to catch an intraday correction of 25-30 pips. Going short will be relevant amid a false breakout at 1.2172 or on a rebound at 1.2204 in the hope of a similar correction. Good luck and have a nice weekend.